There were a lot of conflicting trends in the market indicators this week. I'm Tony with Clarkson Santoro, and this is our real estate update for November 11th. In this series, we update you on the latest trends that are occurring in our real estate market here in San Ramon. Using our more than 50 combined years of experience helping clients buy and sell homes, we explain what those trends mean for you as a homeowner or as someone who is looking for a house that you will love to call home. The current inventory is 28 homes, down from 36 last week. The average asking price of those homes was $2,026,000, which is up from last week's average of $2,018,000. 5 homes asking an average of $1,887,000 went pending this week. That is less pending homes than last week's number of 7, with a higher average asking price from last week's $1,758,000. A total of 8 homes sold this week, with an average sales price of $1,386,000. That average price was down from last week's $1,759,000, and the total number of sold homes was higher than last week's 6. So now that we know how the market performed this past week, we can look at the broader trends that give us insight into the health of the market and help us understand where it might be heading. Before we do that, if you find this information helpful, you should subscribe on YouTube and follow us on Instagram so you won't miss the next update. You can also share this with a friend so they can be informed on their local market as well. Now on to the market indicators. The inventory continued its downward trend. We are now sitting below 30 single-family homes on the market. That is the lowest it has been since before the market started slowing down in May. Assuming homeowners continue to hold on to their homes unless their life necessitates a move, we will likely see the low inventory continue to hold off what some people feared would be a market collapse. Last week we scored this indicator at 65, and this week we are raising it again, this time to 73. Market turnover rate has stayed consistent for the past few weeks as demand starts to slowly outpace supply. We are now above our normal neutral indicator, and our market inventory is turning over 1.04 times per month. The one thing to consider here is that with how little inventory there is, it is a bit surprising that the turnover rate is not climbing quicker. What that tells us is that buyers aren't feeling the pressure to get in before it is too late. So while there are still plenty of interested buyers, they are able to take their time and still pick the best house, not just the first available one. Last week we gave this indicator a score of 48, and this week we are upgrading it to 52. The amount paid under the asking price dropped back down slightly this week. We are still seeing closing prices at 2.5% under the asking price. Even with low inventory and a higher turnover rate, we are not seeing buyers feel the need to bid and compete with other buyers. Last week we gave this indicator a score of 39, and this week we are dropping it down a few notches to 36. The 30-day rolling average sales price took a large dip this week. We are down about $130,000 in average closing prices this week. This number isn't too surprising considering there was a significant drop in average asking price of pending homes about 1 month ago. If you look at the pending price of homes on this chart, that closing price should be coming back up in a few weeks. Last week, we gave this indicator a score of 54, and we will lower it to 45. But as mentioned, we anticipate it will be rising in the couple of weeks. Looking now at the indicators that help us tell the future, the Invesco QQQ fund came up about 3% this week. This is a good sign for the financial strength of buyers that we see coming out of Silicon Valley. The potential bad news for that same buyer pool is the rumored layoffs at large tech companies like Facebook and Twitter. The overall stock market did better this month as well, with both the S&P 500 and Dow gaining about 10%. So last week we gave this indicator a score of 33, and we are raising it a little this week to 38. And finally, the interest rates moved how we expected them to. After a brief respite from a staggering march upward last week, the rates are back above the 7% this week. The national average for a 30-year fixed mortgage is now 7.08%. This will continue the downward pressure on home values in general, but if you take into consideration that San Ramon inventory is currently well below normal, that will keep the values from collapsing under the weight of the cost of mortgages. Last week, we gave this indicator a score of 22. This week, we are lowering it to 20. Overall, there are a lot of conflicting trends in the market indicators this week. The basic summary would be that, in general, the cost of money and the negative overall economic forecasts are working against home values in San Ramon. However, due to the low inventory volume and general high desirability of our city as a place to call home, those negative forces are really only pausing our home value growth, not pushing it in a strong negative direction. Last week, we gave this market score 43, and we are raising it ever so slightly to 44 this week. For homeowners, this time of year is usually a time where we recommend you sit and wait for the favorable spring season to consider listing. And that is still generally good advice. The caveat would be that since there is so few homes currently on the market, it makes sense to put your house on the market now if you are considering selling, and giving it a week or two to see how it performs. The worst case scenario is that you pull it off the market and go again in the spring like a new listing. For buyers, this market remains as good a time as any we have seen in the past few years to purchase a home. I know that might sound counterintuitive with the way mortgage rates are going, and with everyone in the news screaming about how we are going to see a market crash. But the reality of our market situation is that we have continued to improve in our property value year over year. We are still looking at higher average prices this year than we did last year, even with the recent market downturn. So our suggestion would be to buy now while the competition has gone away. If you wait until interest rates come back down, I'm afraid you are going to run into the same struggles of being outbid by several potential other buyers. I hope this weekly summary and commentary helped you understand how our market is affecting your options. Let me know in the comments down below or contact us directly if you have specific questions about how you can navigate this market to sell or buy a home. And if you find this information helpful, remember to share it with a friend and hit the like button and subscribe so you'll always be up to date on the latest real estate news here in San Ramon. Have a safe weekend, and we'll see you next week with a new update.